Welcome to the greatest crypto podcast in all the universe's worlds. Welcome to the Orange Brick Road. And you know it's important because I'm using this deep voice.
Welcome back everyone to the Orange Brick Road podcast, a podcast about cryptocurrency by cryptocurrency professionals for people interested in crypto. My name is Micah and I am part of the team here at OBR. In today's show, Brandon chats to the team at Blocksquare, who created a real estate tokenization infrastructure which not only allows any real estate company or entrepreneur to operate their own marketplace, but also connects real estate owners to DeFi via the Oceanpoint DAO. Real estate owners can now create a new revenue stream and gain exposure to crypto by locking in their tokenized properties, while liquidity providers can earn passive income from a protocol backed by the real estate economy. The first team member from Blocksquare is Denis Petrovcic, who is the CEO and co-founder. Denis is a forward-thinking, open-minded entrepreneur with a passion for the unknown. He co-founded Blocksquare in 2018 with his vision to leverage blockchain technology to open the world of real estate investments to anyone with an internet connection. The second team member is Makram Hani, COO of Blocksquare. Makram's vision is revolutionizing real estate as an asset class by liquefying, adding transparency, removing imperfections, and making it accessible for everyone. He has over 18 years experience in real estate, and his concept Real Estate 6.0 is considered the future of what the asset class will become. Blocksquare's CMO, Julia Bushholz, is based in Perth and is your point of contact for all questions related to the Australia as well as APAC Asian Pacific region. Please get in touch with her if you wish to tokenize your property or operate your own real estate tokenization business, or simply learn more about Oceanpoint BST and what the Blocksquare team is up to.
All right, welcome back everybody to the Orange Brick Road podcast. Today we have two people, one Makram and the other one Denis. They're from Blocksquare, and we'll be talking about Oceanpoint, which is a protocol that is very interesting, and I've been involved in through Julia. Julia, I told you I'd give you a shout out. There's your shout out, sister. So yeah, I've been involved in it for a while, and I've checked out, and I think it's awesome. So yep. So what we'll do is we'll just start off with a little intro. Makram, if you want to just introduce yourself and how you got into crypto.
So I'm the real estate guy. So I'm the guy who's been in real estate for around 20 years, and I tried to build my own tech, and I failed. So what I've done a few years ago is I had a brilliant idea, which is still a brilliant idea, but I couldn't do alone, which is called Real Estate 6.0. And in my opinion, real estate should be something that is available for everyone, where everyone can access transparently, efficiently, and get on that wealth generation ladder. And my thought was to develop the tech to do that. After a few years of trying to do that, I found out that I'm the real estate guy. I'm not the tech guy, and I'd better align myself with the right tech so that what I present and represent from a real estate perspective is possible also to get to the world with the tech that serves the purpose. So I started my research, and that was a few years ago. And I landed Blocksquare. And Blocksquare got me for a few reasons. One, it's the right tech, the right methodology, which is as important to the tech, or sometimes more important than the tech. Because remember, the back end, the front end, and the engine is tech, but at the end of the day, the asset class you're dealing with is a conventional asset class that we all know. There's a physical asset class that we all deal with. There's legislation, there's sets of rules, there's perceptions, all of those play a role in it. So I fell onto Blocksquare, where I found the right tech, the right frameworks. They've really well thought of every single piece, and the right people. So it was a team with the right ethos. They shared my energy, and I said, you know what? This is where we would like to be. And it started with an alignment with my company, or one of my companies, and Blocksquare, and then developed. And then one day, Denis is saying, you know what? It seems that we need to take this a step further. Do you think that you would be interested to take it a step further? And I said, nah, I'm joking. So I said, definitely, why not? Let's jump onto it. And it's been an amazing journey. What we're doing at Blocksquare today is revolutionizing how your father, my father, and our sons would deal with real estate, our beloved real estate forever. We'll reduce tension on families, will give more security to communities, will change lives as we know it and the relationship with real estate. And when I say it changes lives, I mean it, because in general, when we are born, most of what they tell us is that you need to work so that one day you own your own home. You graduate and you develop, and then you own your own home, or you generate wealth. And mostly all wealth either starts in real estate or ends up in real estate. So someone will tell me, I made my wealth in telecom. Tell him, what are you doing today? Most probably buying real estate. And we believe that we can impact that. Actually, prior to us coming here, I was reading an article that Denis sent me this morning. By the way, amazing article, huh? I didn't comment on it yet, man. Amazing article. It's lovely. And the beauty of it is that it simplified the evolution that we're living. And in our opinion, the evolution is just starting. This is the embryo, and much is yet to come. Again, I'm a happy member of a team that's working hard to do that, and hopefully we will be able to impact it. And thank you for having us, by the way, Brandon.
No, absolute pleasure. Any friend of Julia's, mate. Cool.
And thank you, Julia, by the way, our CMO, yeah, who's a main driver behind us being with you, Brandon, today.
Yep, no, Julia, she's one of us, mate. All right, Denis, if you just want to just introduce yourself.
Thanks, Brandon. Yeah, Makram. Wow, it was, well, thanks for for this comment. It really appreciate it. And I'm really glad to have you on our team with your expertise from real estate. It was exactly what that mindset that was missing at the time. And since you joined the team, I think we just shifted to a higher gear, definitely. Having a chief operating officer with your caliber and business knowledge, amazing. So thanks for joining me here in this journey and trusting in the team and what we're doing. Yes, like you said, I believe as well, the mission here is not to just create a nice to have product for the real estate industry, but redefine it. And we're not the only ones doing it. There's a whole set of projects doing this, tackling this from different angles. And I believe that, you know, if we're able to kind of join, collaborate, the market is so huge and ripe for disruption that we're going to achieve this much more easily than we think it's approachable. Now, we've been building this honestly in my head since 2015, probably, even though I really got into crypto in 2016 when I bought Ethereum for the first time. And before I bought Ethereum, I actually studied it 3 months. I was in a business kind of void. I exited my previous company and I was just thinking, you know, what to do next. And then Ethereum kind of came in a conversation in a restaurant, like always, right? There was this blockchain thing. And I remember, you know, coming across Bitcoin in 2011, trying to buy some Bitcoin, couldn't find a good way, trying to hook up a machine to start mining it. But I was running a restaurant at the time, and it was a very beginning of it, 2 years in. The crisis came, you know, I had a staff of 12 people to make sure that their families get food on the table. So it was, you know, my focus was definitely elsewhere, even though probably if I would have started mining Bitcoin, it would be easier to put food on their table, but, you know, it doesn't matter. Today, I'm glad I made my journey as it is, because it brought me to this moment right now, which I'm really enjoying, and I'm glad I'm here. So back to Ethereum, I've been a big supporter or a big believer in Ethereum since day one, basically. I followed the whole ICO hype and the whole, I even worked with a couple of ICOs, advising them on how to structure their sales, how to structure their tokenomics. And I learned through that process, that people really don't understand how important it is to create solid tokenomics. And that was kind of how we started building Blocksquare from that knowledge and understanding. I got in 2016, we started a blockchain lab within Medius, which is Victor's, my CTO and co-founder's IT development company. We started like a blockchain lab. We wanted really to research how smart contracts can be used within the corporate environment, and we saw that it's way too easy, way too hard for somebody in the corporate world to actually adopt this, and it's not feasible. It's too early. It was just too early at the time. But I had a small real estate investment myself. At the time, I bought in 2014 one of those big houses that nobody actually looking to buy, and repurposed this into a student co-living. So 20 students co-living in the same space. There's a shortage in Ljubljana, where I come from, in Slovenia, of student accommodation. There's no big campuses around, so it was a good investment to do it. Like Makram said, you either start with real estate or you end up in real estate, and that's very interesting, and it is true, honestly. And then I thought, how could this be something that can be reproduced, right? Because I made an investment, but it ended up there. I would need to find, a new way of financing this, and at the same time, I started researching crowdfunding of real estate, and it caught my interest. And then Ethereum came, and then we did this blockchain lab. And so it was a process that led up to Blocksquare being founded in 2018. And at the time, we basically started pushing this forward. And it was a very interesting journey. Hopefully we can share much more about it today.
Yeah, it kind of sounds like it's something that's evolved, over time, like most things do, So what were because at the end of the day, what you're trying to do is open up, well, from my understanding anyway, is kind of open up the real estate ecosystem to those that can invest in hundreds of $1,000, $1 million properties without having millions of dollars or hundreds of thousands of dollars. Yeah. So you can basically have $1,000, and you can invest in real estate, or 10,000 or 100,000, whatever. So it's almost democratizing it. And yeah, the way I see it, well, I want you to explain to me, like, explain to the audience if, what, and just pretend that they're all new people, because we have them right across the spectrum. But why would someone invest in what you guys are doing?
All right. So I think this is multiple layers, I guess. So are we referring, why would somebody invest in a tokenized property? Are we saying, why would somebody invest in what we are doing?
No, the tokenized property. Sorry. Yeah.
So I think there's a couple of things. I guess anybody who invests in crypto understands the power of self-custody, the power of just being able to today say, hey, let me invest $1,000 tomorrow into a new coin, let's say. And maybe this creates wealth for them. And then they're starting to think, what else, right? And you can't really just have crypto, a very volatile asset class, and tokenized fiat stablecoins. That's the spectrum today, more or less. Now, tokenized real estate is something that's, way less riskier than volatile crypto. It's a cash flowing asset, so it generates revenues for the holder. And on the other side, it also hedges inflation. So real estate has historically been able to hedge inflation as well as produce cash flows. And portfolios usually are quite highly allocating towards real estate related investments. Why? Because that's a wealth preservation asset class. And you might, bet on the right horse a couple of times, but it doesn't mean you're going to reproduce the same results over and over again. So when you are able to find your hockey stick, you want to distribute or allocate some of that wealth into something more tangible, I would say. Probably Makram has things to add here on why tokenized real estate would make sense. One of the things I believe it's underrated is also diversification. If you really know what you're doing, you can buy one property and be great at it, but you need to know what you're doing. Many times you don't really know, where you might feel the market somewhere, like a location or a type of property that is going to be successful, but you don't know exactly which property. So with tokenization, you can create a diversified portfolio, almost as diversified as a real estate investment trust. You could easily own as an individual 100 properties. Can you do that now? No way.
Yeah, that's kind of what turned me on about it was, say, just use round figures, add a zero, take a zero, add 2 zeros, whatever it may be. It's like if you had $10,000, you basically can't invest in real estate. But with what you guys are doing is you can now invest $1,000 in 10 different projects. So that sort of mitigates your risk, for some properties, because you might say put $1 million into, or 100,000, 500,000, whatever it may be, into one property, and over 10 or 15 years, circumstances might change. They might build a freeway that runs right past, or divert, or the neighbors, things change over that decade. And so if you're all in on one property, that means, you might work out well for you, but it might do the complete opposite. So by spreading the risk, you're mitigating that, and making it more sort of risk-free, you know what I mean, with yields. And that's what Makram, like, you've been in real estate for many, many years. What were the pitfalls in real estate that you see that this is fixing? Do you know what I mean?
Cool. Let's start from the beginning. When I went into real estate, they taught me a few things. One, it's an illiquid asset. Yeah, it has, as every other asset class, pros and cons. And some of the pros were it's a great investment, it cash flows, it's a hedge against inflation. It's an asset that you can touch and feel. It's an asset that is, in general, with perpetual rewards, because you can will and will and will. All of those are pros, but there was cons. One of the cons is that it's an illiquid asset. Two, it's an imperfect market. And by imperfect here, we don't mean not perfect. We mean if you buy the first and the last stock in a company, they're all the same. The first stock of Google and the last stock of Google or of Alphabet are the same stock. This does not apply to apartments in a building. The first apartment and the apartment directly beside it, which is the same square footage, can be different for multiple reasons. One of it is the view. The second is the light exposure. As simple as that. And then the third challenge is transparency. You cannot track. And that's why you see people buying real estate sometimes for over the price they should buy at. And this creates, by the way, opportunities for real estate investors like me when we're buying real estate. Yeah, we make millions a year just by buying and selling the right real estate, or buying and renting and generating amazing cash flows and amazing returns. And then there is other flows, which are part of the operation, which are part of real estate as an asset class. Whenever you mortgage it, the high down payment that you need to do, it's a bulky asset. You need $1 million to buy a property. So that's the beginning. And I will tell you now, the beginning of real estate 6.0, my theory. when I was looking at it, I was examining why would Apple, at that time, hundreds of billions of dollars a company, now I believe few trillions of dollars, why would Apple be possible to buy? At that time, it was $93, $94 a share. At $94 a share, you're buying hundreds of billions of dollars of a company. And to buy my neighbor's house, you need to spend $1.5 million. Is there something wrong here? This is a simpler asset to understand, easier to manage, less risky when it comes to the variables in it and the dynamics of it, and still needs $1.5 million. Now, you can do that, by the way, in conventional manners. You don't need distributed ledger technology and blockchain. Yet, when I got introduced to that, and again, I'm not a tech guy. I barely know how to use an iPhone, yeah? I have a 7-year-old guy who's very famous in one thing. He teaches me how to use my iPhone. So my 7-year-old son, who teaches me how to use the iPhone, also, at the time when I got introduced to blockchain, said, aha, so this is the aha moment of, if you apply this onto real estate, and I don't mean only one element of this, I mean, how can you impact the asset class? You would change the illiquid asset to a liquid, the non-transparent asset to a transparent, the imperfect market to a perfect market. You would, the bulky to a non-bulky. Now, people would think that it only has financial benefits, but that's wrong. It has communal benefits. If you had a community today, and if you watch movies, I'm sure you would notice that most of divorces start with a foreclosure. Do you watch movies, Brandon?
Yes, mate.
Yeah. And most of divorces start with a foreclosure. Family tension, that kind of non-humane, and I would really call it non-humane, and I didn't live it, but I'm sure my parents did. Non-humane a set of emotions that's associated with you losing your sense of security, your most important asset, your home, what you've built all through your life. And that is because you would default on few payments. So, and in general, you live for years trying to build up for the down payment. How about if every tenant in the world can buy a portion of the asset that he lives in or any other asset while he's a tenant there? How about if every human being we know, including my neighbor and your neighbor, can be a real estate owner in a diverse manner, can buy a property? And I believe the future will have a global tokens market. I believe the future, you will be able to see an order book and an order wheel. I believe that in the future, you'll be able, and you need to be able to see that asset class transparently reflecting. And that's the future of our asset class. So it's more stability to communities, more emotional benefit, as well as more rewarding financially, not only from a diversification point of view, but also from early accessibility. If you wait for 5 to 10 years, and this is what it takes people usually to collect the down payment for a house, 5 to 10 years to collect a down payment to a house, and mostly they have family support as well. Usually, in an average market, the property have compoundedly grown by approximately 100% over that period of time, and that's in an average market. And our markets globally have not been average for the last few years, for plenty of the last few years. So in an average market, you've already can buy much less with your money. Your money is worth much less and property is worth much more. How about if you can buy whenever you can, as much as you can, and you run with it?
Yeah,
this is what we're doing over here.
Yeah, see, that makes sense to me, is because like you can be an 18, 19-year-old, an apprentice plumber, you know, or whatever, and still be able to get into the property market, whereas that is literally out of your reach unless you have like a rich family or some family support. That's out of your reach for the next 10, 15 years of your life. By the time you've done 3 to 5 years at your apprenticeship, you know what I mean, which is basically just a barely a living, and then you build up a career sort of 5 to 10 years later, or start your own sort of small business after 15 years. Like you said, it's a 10 or 15 year window that the price of real estate has gone up, your value of your money has gone down. But if someone can put in $100 a week, do you know what I mean? Into real estate, it gets them into that market. That's what I like about it, and that's what I like about your project. As far as the Dennis, you might be able to get on in this. Is when you say crowdfunding, if you can go into that in a bit more detail, and the tokenomics of how the tokens work, and what your inflation rate is, and what the burn rate, or if there is a burn rate or anything like that. Sort of just go into the more nerdy tech sort of aspect of it, mate. So get your nerd on.
Sure thing. So in terms of crowdfunding, if I can take this is like the first thing when people think of real estate finance is, how do I get a new project up and running, right? I have some money to invest. I have gone to the bank. Maybe that deal is gonna get me through, but maybe the financials afterwards won't be able to service that loan. So I need to get more equity into the deal. And then you start thinking, how, do you go to some friends and family to invite them in the deal, or is there other ways, right? So, at that time when I was researching, there was crowdfunding, and it was mainly US based with a couple of platforms, maybe the UK as well. But what I learned is also the cons of real estate crowdfunding, and that's when I met tokenization, or it was not called that at the time, but blockchain and smart contracts and tokens that started, moving some wheels in my head, and started thinking, how, if that solves the problems of crowdfunding, and it does.
But sort of break that down.
It does. Yeah.
Break that down to, okay, why would you want to crowdfund?
Like I said, I have a deal. It's a 1 million investment. The bank is probably going to lend something up to 70% LTV, which means 700K. I need to bring 300K of capital to the deal. I have 150, so I'm 150 short. So I can call Makram and Brandon and say, hey, are you guys into this deal? But what if you're invested in something else, or just don't it's not the right timing for you? Then my phone book starts to be short, and then I need to find another solution, and there's nothing else, right? And because even the more kind of successful real estate investors, they have maybe a phone book of 50 numbers, family offices, private investors, and those investors keep a certain percentage in real estate deals. They don't go above it, because that's what their wealth managers kind of say to them, is like, keep a portion in stocks, a portion in treasuries, a portion in real estate, and then play money or cash on the side, so when an investment comes, you can take it. But if you are already invested, 30% in real estate, don't go above it, right? Because it's too illiquid as an asset class, not because it's not a good investment, but because you might need liquidity at a certain point in time, and you're not going to be able to achieve it because you're going to be locked in a deal with other co-investors there. Now, that's what crowdfunding is for, to solve those situations. But tokenization is not here to update crowdfunding. Tokenization is here for so much more. There's business models that people, when they think of real estate tokenization, haven't heard of or haven't thought of yet. And we as a company, we're not here to run a marketplace. We're here to help anybody run their own marketplace with enabling them to achieve any of those business models. You can create a rent to buy type of app on top of Blocksquare. You can create a lease to buy type of app on top of Blocksquare. You can create a crowdfunding platform on top of Blocksquare. You can create an exchange where real estate tokens are traded on top of Blocksquare. You can create create a product that is serving real estate developers in the multi-residential sector, for instance, on top of Blocksquare. So there's a lot of things that Blocksquare can enable, and we're an enabler to traditional real estate companies, because before you had to go to another provider, a third party, for a service. With Web3, you can own that service. Just like today, any retailer can have its own online shop. Now with Web3, any real estate company, any real estate agent can have its online shop. And they can have a community of 50 users, 500 users, or 50,000 users. It doesn't matter. It can be private clubs. It can be open platforms, you know, accessible to anyone. It's how you want to structure it. And here's the power that we bring to the people with the tech solutions. And it's not just tech. We solve the legal part, which is the main concern when it comes to real estate tokenization. So we really serve everything on a, you know, silver platter, a silver plate to our customers.
Well, that just makes the onboarding a lot easier, you know, to transition. So like, and that's what you want in a business, is make it things seamless, you know, not to have the hurdles or already overcome the obstacles before they even raise their head. So what you're saying is if I'm a real estate developer, for example, and I want to do a 18-story building, or I own a hotel and I want to tokenize that, or I have a caravan park with cabins on it, for example, or I just want to tokenize the building that I'm in, they can approach you guys and then you guys help them through that process to do it. Is that right? So
Exactly.
you take care of the legals, explain to them the tech, how it all works, what the tokenization, work out what's the best way to tokenize, that sort of thing. So they just approach you. Is that, do you charge a fee to do that, or is it you just take a commission off the sales?
So obviously, as a company, we need to make revenue, right? And
Yep.
so yes, we charge a fee for setting up a marketplace, for tokenizing a property, etc. So, but I think what we bring as well with this is a lot of expertise. Like I said, we're not doing this since yesterday, but for some time now. And many have called us the pioneers of real estate tokenization. And I believe we actually earned this title because the first property that we tokenized directly ourselves was a single parking space that was in 2018. And we were the first company to actually sell tokens of a real estate asset freely on the market to anybody who expressed their wish to invest. We created an MVP around it, and we bought the property ourselves. It was not a big investment, but it was 15K investment at the time. We were looking for partners to tokenize a property, but nobody wanted to actually execute in the end. They were really interested in the concept, but then they became afraid and they stopped.
Yeah, especially when
because we were thinking of, a property that's at least 1 million worth, maybe 2-3 million, etc. And we were after this type of real estate owners, and it was really, hard to think at the time how to do this, how to complete this. But at the same, we were out of the ICO craze where tens of millions were raised. So we were thinking, this is something that can be achieved, and probably it would have been achieved. But as time was passing and we were not able to close a deal, then we were thinking of the minimum viable property to tokenize. And we learned that in Tech Park in Ljubljana, there is a need for renting parking spaces by office tenants. And that even though there's many parking spaces that are empty or vacant, the owners, Tech Park Ljubljana, were not able to sell those because of a decree or an internal regulation by the partner, which was the municipality. So they were only able to sell those parking spots and not lease them out. Strange thing. But we bought the parking space, we leased it out, we tokenized it, and we sold it to 18 investors, I think some of them also from Australia. They were spread across 4 continents, actually. And they've been earning revenues ever since. So this was a really, really cool test that we did to break the ice.
So it all started from a car park.
From a garage. We even made a post on our blog. It's like, you know,
Exactly.
companies that started from a garage, you know, Apple, Google.
Yeah, that's straight up. I started mine with just a laptop, mate, you know, and they're the best way to start. But see, I've noticed that you've got properties like scattered all across the world. You know, you in Dubai, you got some in Turkey and Bruges and Vienna. Yeah, Vienna. Yeah, you're all over the place. You also got one in Port Kennedy, which is pretty funny. That's in Geraldton, right? Is that right?
It's not so far. It's not so far from you, huh?
Yeah, that's
Yeah.
right. Yeah, in Germany, and yeah, you got them all over the place. It's mental. Are you doing a lot in Australia? Are you working with any development people or companies in Australia?
We're working with people in Australia, of course. We have also presence there through Julia, who I've met. I was lucky to meet in 2019 in Crypto Valley in Zug at a competition. She was there with the team of the company she worked with at the time. And then we met, or we kept on meeting on a couple of conferences as well, and kept in touch. Yeah, Julia's been doing really, really, really well alongside Abidi as well, doing the courses in collaboration with Reiva, and they've been educating the Australian market, the real estate part of the Western Australian market, on the power of tokenization.
Yeah, see, I think that's one of the
yeah.
biggest, sorry to interrupt, but one of the biggest hurdles, and that's why Abidi and Julia are just great at it, is you're trying to you're trying to change the mind frame of people that have been in real estate for decades, you know, and it's very institutionalized. And Macron, you'll probably understand that by being in real estate for so long. They're very set in their ways. And then you walk into the room and go, hey, everything that you're doing at the moment is not going to exist in the next 5 to 8 years. Get on board. Here how it is. Most of them don't want to hear it, you know. So I think the education part, have you found it's hard to break through to these people? Like
In general, people are set. However, again, in the article that I've just been reading now, the evolution is not new eras. Usually, in evolution or evolutionary terms, when you have a new evolution happening, it's a new era. In what we are living over the past few years, it's not new eras, it's layers. So every piece of evolution is sitting above another. Probably classic real estate and conventional real estate and how we own it and trade it today will still exist forever. People will still exist, buy property. I'm one of the people who own and will continue to buy and will own property that way. Yet, this does not mean that property will only become property as a service, yet property as a service is a major part of that. It's similar to the evolution of anything. So today, when we talk about the change of mindsets, people change because they need to change usually. Rarely do people change just because it's fancy to change. Yeah. Well, that's a very small percentage of people who do change for that reason.
Yep.
Change is coming and change is for the best. Now, it wouldn't be easy for people who've been doing something the same way over all of this time to change it overnight. However, when you show them the beauty of what we're doing to them, to their businesses, they will immediately change. What Dennis was talking about a second ago is when you show a developer, not only that they're able to tokenize a property, but they're able to launch their own marketplace, branded them, white label, using our technology, you're changing their perception of what they can do. If they're attached to the conventional methods, remember, behind all what we're doing is the conventional asset. The only thing that's changing is all the layers on top. And yes, they need to understand that evolution is taking place beyond that, beyond the transaction, beyond the logistics of the transaction, beyond the legal frameworks, beyond the efficiency and the information. AIoT is coming, the way people build is changing, everything, urbanizing, land is changing. So areas in Perth where you did never think would be developed tomorrow morning may become cities. And places where people can buy property today, an acre for a few hundreds of dollars, will not exist that way probably in the future. So all of this is changing. And the good thing about everyone in real estate, yes, they haven't historically needed to change because people in real estate in general were doing well most of the time, and the asset class was doing averagely well or very well at different times. However, they are by nature people who follow the money, and by nature people who follow the right edge of the business and the industry. And that's why I don't believe that it will be impossible when you show them the benefit of it to their businesses, to their assets, they would move with it. And that's since the adoption of the first MLS in the world, and since the adoption of everything after that. Yes, it was difficult to crack in because regularly to present a solution, you need a problem. And you need a problem that's hurting, because if you have a problem that's not hurting and you tell someone, yeah, but take this medicine, probably they won't. It needs to hurt, they take the medicine. However, real estate people at different times, because of external dynamics or internal dynamics, changed, and they will continue to change. And REITs came as an evolution at the time. Now they need to evolve, and they are evolving, and they recognize it. So even people who and parties who are trying to push back understand that it's inevitable. It's only a matter of time, and we're banking on that.
I mean, sorry, just to add one thing. I was in Paris just last week at this real estate conference organized by GRI Club. They bring together the real estate sector. Also, people from the US came as well, etc. It was 600 delegates on the 2-day event, and I was running a panel on real estate tokenization. I was asked to moderate it as a representative of Fibri, which I co-founded in 2018, and I was a bit scared because I had only 2 co-chairs announced on the panel, and one was coming from London, from a very conservative or traditional real estate investor, and the other person was coming from Skanska, which is one of the biggest real estate developers in Europe. And they've been putting a lot of thought in real estate tokenization for the past 2 years, honestly, and then been moving towards that realization of using this in their business. And I didn't know how many people are going to show up for the panel. It was like in a round, it was like a round table or a round set seating where anybody can join in the conversation. In the end, the room was packed full. People from the real estate sector, knowing what a DAO is, they were starting the conversation, knowing that there is one metaverse and not many metaverses, knowing that tokenization can be achieved through the issuing, tokens representing shares, but there's other models as well. And we talked on a so high quality level that I was amazed. I couldn't even add my thoughts to it. It was so intense. The conversation went for an hour, and probably if there would not be a hard stop, we would just continue for another hour. And the thing is, this is showing to me that as opposed to 2019 or 2018, when it was really a strange topic in prop tech events to talk about tokenization and nobody knew anything about it. Now, traditional real estate, for people in traditional real estate, understand why. Probably because they bought Bitcoin at a certain point in time, or Ethereum, and they went down the rabbit hole there.
Yeah, there definitely is going to be a shift. It reminds me, I was, I don't know, 6, 8, 12 months ago, or something like that. I was at a business conference, and there was, I think, 5 representatives there from one of Australia's biggest banks, and the main guy, the older guy, he came up to me and goes, "Oh, what do you do?" And I said, "Oh, I teach people how to get in Bitcoin and cryptocurrency, that sort of thing." And he goes, "Oh, that's all garbage, man. It's all going to go to zero. It's a complete scam, da da da." And he went on, and I let him go on a bit and let him go on a bit. And I said, "Listen, mate, we don't need banks. We don't need you anymore. We can literally get loans how we want. We can earn our own yield. And I hope that one day your entire industry just implodes into the black hole of abyss and takes everyone like you with it." Right? Because I had enough. I'd listening to him just going on and on and on. And so I just lost it. Anyways, out of the 5 people that were represented from that bank, right, the 3 of them were younger guys. They were like 25, 26, something like that. You know what I mean? And as I'm getting into this bank manager, they're in the background and they're giggling and they're sort of smirking, righty? That found it quite entertaining that I was telling their boss and CEO he's a twat and he doesn't know anything about the future of the economy, right? And it ended up, there was about 10 people around, sort of gathered around because they just heard me just going off. I literally didn't take a breath for about 5 minutes because I just listened to his just garbage. And I'm like, you're in finance and you don't understand what's coming. That'd be like, I don't know, having a horse and buggy and not understanding that there might be cars coming. You know what I mean? You're just missing out. And how can you call yourself a professional in a management and someone that can then manage other people's funds when you don't know what's going on in the economy? So anyways, I won't go into it too much. So as we're walking out to the car park and that, the 3 younger guys that were there, they're all assistant bank managers or something like that. They said, hey, listen, mate, can we hook up and can you teach me about this crypto thing? I've been looking at it for ages and all that sort of stuff. So absolutely, brother. If I can get anyone from traditional finance out of it, mate, I'm into it. So they ended up becoming my clients. Yeah, and on that too is I have I'm going to play devil's advocate, and Makram, you can sort of give me your point of view on a couple of things. One is I have got many over the years real estate guys into crypto. Like one guy example, he owned 11 or 12 properties, owns a bar, hotel in Vietnam, works offshore, righty? Big real estate guys, have been in it decades. And it's like stock guys as well that I get into crypto or want to get introduced to it. And I say to them, hey, listen, don't go all in. Just liquidate one of your properties, take the profit of that and do it. And or if you're in the stocks, liquidate some of what you're in profit with, obviously, and just allocate, say, 3 to 5% of your portfolio into crypto. That way you're incentivized to learn about it because you're actually you've got skin in the game. And secondly, you can see how it performs and why it performs, right? So anyways, over the years that I started, the one real estate guy, he's 100% out of real estate now, 100% in crypto. His reasons are he doesn't have to worry about leases, doesn't have to worry about real estate agents, doesn't have to worry about the interest rates on loans, doesn't have to worry about maintenance. Do you know what I mean? Tenants ripping up the joint. The illiquid, not being liquid. If he needs the money, it's going to take months, So it completely gets out of real estate into crypto. So why would I invest in real estate when I can just buy Bitcoin?
I'll say something now that everyone will hate me for. And it's not like people like me already, but it will increase even. Beyond, I'm not a crypto investor, Brandon. I've not
Really?
bought. Yeah, and
Boo.
nah, exactly. Now, look, I don't understand the crypto, and I believe that I would only invest in something I understand. So that's why I've partnered with amazing guys who've done great in crypto. They've done their money or most of it in crypto, and we created a crypto fund, and they now run it. And I don't get involved in it at all just because I don't understand it. I really do not understand it. I'm not wired that way. As I said, my 7-year-old helps me with my iPhone. So, but I'm also not a gold guy. So you'll understand, where does this mindset come from? It comes from utility. I'm all about intrinsic value. And it's arguable what is intrinsic value and how does intrinsic value happen. However, when I look at real estate, I say the following. If you sell FMCG, fast-moving consumer goods, nuts today, there will still be people who can't be your customers because they have an allergy, and others who can't be your customers because they don't like nuts, full stop. If you are in real estate today, every single person around is your customer, because I don't believe many like tents. So eventually, and even those who like tents, it sits on real estate. So eventually everyone is a client. Now, why would anyone buy real estate? First, if they don't like the management and the maintenance and the liability behind it, what they need probably to do is get in touch with us at Blocksquare, because we facilitate them owning real estate without all of this headache, where someone else takes care of this headache. Yet the underlying is still a real asset that produces, that cash flows. And here is the main element. I can't advocate about Bitcoin or any other altcoin or even Ethereum. However, I can't say with or against. What I can say is Ethereum to me is a great tech in action. However, because I can't advocate in any of those, what I can advocate in is that your house is something that you're living in and you'll be living in for a considerable future. If you own it, or someone else owns it, there is a party getting a benefit of that, getting all the pros and the cons of it. If we are able to remove the cons and make it an ultra asset class by adding so many pros, by adding all the benefits to it, but eliminating the disadvantages of owning a house, it's amazing. Now, still, why would I buy a token of real estate, not Bitcoin? It's because it's Bitcoin with an underlying asset. So wouldn't you like to have an underlying asset to every Bitcoin? Probably yes. Now, that's a thing. And then owning real estate is also another thing, because not only does it have an underlying asset, it can pay you dividends. So imagine, for those who evaluate Bitcoin like gold, although I believe there is no much similarities, Bitcoin is better. Bitcoin and gold today have one similarity in general. Gold cannot pay you. Yeah, there's no cash flow. You can hold it, can keep it. Now with Bitcoin, you can probably do slightly more with it. However, if you have an underlying asset connected to every Bitcoin and is cash flowing, that generates and creates a different dimension, not by a bit, by much. So we can call it now much coin. So that's exactly why people would go for a real estate token, not Bitcoin, in my view.
I think it's not binary, if I may here intervene. In my view, it's not binary. I was just sitting at lunch yesterday with a friend, you know, we were talking about investment, and I said, look, it's very easy for me. I just have two assets that I'm into. I have real estate and crypto, and I'm set. One is to put food on the table, and the other is, you know, to buy a yacht or a plane or I don't know what, you know, to make life better for the generations to come. I'm not a big expense guy, honestly, right? And what I'm doing, I'm buying constantly every day a couple bucks of Bitcoin. I do that every day for my children, not for myself, because I know that when they turn 18, this is going to be much more than if I put something on in their piggy bank, right? In euros or dollars or whatever. So for this reason, I created actually a spin-off, a company called WiseBee, which basically allows you to subscribe to Bitcoin. You make a payment every month, just like any utility bill you buy into, and that money gets distributed across 30 days to buy Bitcoin every day. So it's DCAing Bitcoin, right? And it's that simple how I see Bitcoin. I see it as a long-term savings asset, because in next 2 cycles, it's gonna X a couple of times. I don't know when it's the right time to buy it. I don't care about it. And I put some side money into it. Real estate on the other side, my real estate investments are creating me cash flow without me doing much. Maybe it takes 1 or 2 twelfths of a year, 1 or 2 months in the whole year, distributed across the whole year for me to manage that. And I'm getting constant cash flow on it. And how I'm using this is I'm using is to put all my time into Blocksquare. That's how I'm able to put my time and effort into something totally new without relying on external investors putting money into this and pushing it and shaping it in a way that might benefit short term, but our long-term vision might be corrupted because it will not generate the returns they want today, but it will generate the returns for the protocol, for the DAO in the future. Because imagine all those marketplaces that are going to run on our infrastructure, on the protocol. They're going to bring real estate assets on chain. And that's our core function right now, is facilitating the migration of real estate assets on chain into token form.
Yep.
And this brings a new market, creates a new market. And that new market creates transactions on the secondary market. And those transactions create a steady revenue stream for the DAO, for the Blocksquare token.
Yeah, no, that's what I like about your project, because to me that just makes sense. But I've been in the crypto for many years, so it does make sense to me. To normal people like noobs and all that sort of stuff, they might need to get their head around, and that's why I like you. You've got the education part of around what you're doing. In order to onboard people, you need to educate them, basically. But yeah, 100% agree with the DCA. I get all my clients DCA, because you can't pick tops, can't pick bottoms. You know what I mean? Generally, you'll buy the top and sell the bottom. You know what I mean? For most people, if they're actively doing it, because it's emotion. You know what I mean? But if you're just dollar cost averaging, it just takes that emotion out. But I did want to say that the how can I put it? I completely lost what I was going to say.
I'll tell you something, Brandon.
I completely
Yesterday,
forgot.
the Australian Central Bank,
Yep.
the Australian Central Bank yesterday announced that their assets have been wiped out. Yeah, $36.5 billion.
Yeah, and they're
Have you heard of
professionals. Yeah. And they're the top of the field, mate.
So I thought that I will fuel up your
crop.
thoughts. I will fuel up your thoughts just by reminding you of something that can be said to the gentleman yesterday, because who will fund projects of the future and who will fund the future for all of us is all of us, is not traditional conventional. And the best of conventional institutions is getting into our business, is getting into tech, because they understand that there is a better way. And it's not our way, by the way. It existed way before we did. And it's a better way. And that's evolution. And the best of them do understand it. And that's why 4 of the biggest institutions in the world, around 8 days ago, created a coalition to try and create similar to what we are creating. Guys, I'll give you an advice. Adopt Blocksquare's technology. Forget about it. Yeah, we can give you a SaaS model to do exactly what you want to do. And I believe that eventually people will understand and realize that this is the way forward. Every broker, every developer, every buyer, every seller will understand that there is benefit in them jumping on board.
Yes, well, yeah, no, 100% agree, and I think it's going to, it's the first person through the breach is generally the first people that get slaughtered. Do you know what I mean? And with any technology, it's the people that first start it. But then when that one person it sort of shows the model, then everyone goes, oh, okay, well, that's possible. You know, so then they kind of jump on board. It's a bit like what's happening with Perth Heat. I don't, you know, but they're a baseball team here in Perth.
Okay.
I had them on the podcast the other day, and we're doing a bunch of work with them because they're adopting, they're paying their players a percentage of their income in Bitcoin. And they're doing some amazing things, like when they hit a home run, they put a QR code up on the scoreboard. People can scan with their phone and they get $5 worth of free Bitcoin. Do you know what I mean? And they're actually mining Bitcoin from their stadium, and they want us and Julia and a whole bunch of other people to help them
We should
implement it.
tokenize their stadium.
Exactly.
Why don't we
Tokenize their stadium.
Come on.
Well, I've actually been, we had a brief conversation about that about a week ago with Julia, because that's the first thing that she said. She's like,
and then people can scan the
Actually,
QR code and
Brandon,
get $10 worth of their stadium.
Brandon, don't give it to Dennis. It's his dream to tokenize the stadium. We're not allow him
Yeah,
to lose.
I pay for everything just for the first stadium that comes to me to tokenize. I pay everything for it. Honestly, I'll pay the whole thing. We cover the cost, no problem.
cool, man.
It's my dream come true to tokenize the stadium. Honestly,
How about if we give them an offer?
I'll
on
tell you
air
why.
here?
I'll tell you why.
Dennis, let's
Because
give them an offer on air.
Let me.
If you come to tokenize the stadium, Blocksquare will tokenize it over the coming month on our own account. Go ahead, Dennis. Please.
Yeah.
Cool.
Why? Because it's really hard to value unique assets that don't have comparables. You know, people in real estate understand that when you do an appraisal, evaluation of a property, what the experts usually do is they take similar properties around and how much they've been transacted for in the past years to understand, you know, what's the current value of that property. With a stadium, it's really hard to find similar transactions. There's probably none usually, right? There may be, you know, the cost to build it, but then there's, you know, how much it's utilized. You know, it's usually the commercial value is not reflecting the social value for the community, etc. Now, imagine you tokenize 10% of the stadium and you create a secondary market for that stadium. There's thousands of people buying the token and selling it, holding it, earning some revenues from the commercial activity of the stadium. Now they're putting a price to the whole asset. Because if 10% was bought by 10,000 people, there can be 100,000 people buying 100%. Theoretically, that's true.
Yep.
There's more people that want to have real estate than there's real estate that wants to be owned, honestly. So it's a smart move by any club. If somebody hears me, please hear me. Any sport club, any municipality that owns a stadium should do this.
Yep.
Because they don't know how much value they hold in that asset for the community around that stadium, because it's community-led, the value of that. It's like tokenizing the Eiffel Tower. Okay, that one has maybe some value, but there's you know, landmarks that don't produce any revenue. Like, I don't know, what's the most interesting in Perth, for instance? What's the monument that is iconic to Perth? Is there
Probably Kings
such?
Park. Yeah, Kings Park, you know.
It's probably not monetizing anything, but it's great value for the community. So if a JPEG in the format of an NFT has value for somebody, do you think a token attached to that park will have value for the community for the long run? I think so.
There's a lot in what you just said, and I'll see if I can cover it all. Okay, the thing. Well, I'll definitely hook you up with the guys, righty? Because we were talking. Well, they were
neither than us closer.
Snap on it, but it's a conversation.
By the way, we'll offer them Dennis to play for them if they're paying in Bitcoin.
Oh no! No, then the deal is dead.
No, they're great guys, and they're just being very.
But I'll fly
innovative.
myself to Perth to buy the first token.
Yeah, cool. No, we'll definitely hook up
and
have
scan
a
the QR
conversation.
code. I'll do that.
Because on the podcast and the guys that I deal with, we've got the head coach, but also he's called the Chief Bitcoin Officer.
Wow.
That's his title. It's the best title ever. Yeah, no, they're just doing great work, and I just love how they're just being innovative and thinking out of the square. But I won't name the names because we spoke off air. But what is happening is, and that's what I was talking about, the first people through the breach, is anyway, there's a portion of the conversation I can say is that he said that there are a lot of sporting teams that are watching what they're doing, and a lot of companies that are keeping a very close eye on what they're doing. And he goes, probably half of them want us to fail. You know, to go, I told you we're going, you know what I mean? Told you so. But the other half are watching extremely closely. And he's even talked about some major AFL teams and some other sporting codes and that sort of stuff that are watching it. So I'm like, so basically, guys, you're the ones storming through the breach, the ones that are going to make all the mistakes and do everything wrong and then learn from it. And then everyone's going to pick up the ball from there. And he said, yeah, exactly. But he goes, you know what, Brandon, what the benefit is of it is that we make all the mistakes and then we can charge people and educate them how not to make their mistakes so we can monetize our learning experience. I just went, genius, absolute genius, you know, because that's what it is. I mean, it's like the first time that people did anything, you know, it's like, okay, I'm just going to sit back and watch, you know, and I can imagine there'll be a lot of companies and investors that are watching you guys going, all right, just give it a year or two, see if it blows up, you know, in a good way or a bad way.
Brandon,
you know?
that guy who's watching, ask him if he wanted someone else to have the first kiss with his girlfriend. While he's watching.
What is
Why
that
would
even
you?
mean?
Where's the fun?
You probably said kiss because
yeah, sure.
we're on air, right?
Yeah,
Well
that's
played.
right.
Well played, Macron.
Yeah, well, that's the truth of it, isn't it? I mean, because that's you know, how you learn is you just make mistakes and then people learn from you. You know, I just want to just finish up with it because I've got this question. I keep on circling it back to it. Malcolm, you keep on talking about this real estate 6.0. What does that mean?
That means that you, sitting today in Australia, can purchase a property from me, living in Dubai, that I own in New York, any portion of it at any moment of time, understand its whole history from a technical point of view, from a valuation point of view, see the evolution of that property from it being a land to it becoming what it is today, from itself to its surrounding, drilling through that, being able to do it online in seconds, pay for it online, own it online, and get paid for what you own online, get revenues online, have it managed properly, do exactly everything that you've mentioned. It's several parts, elements of evolution that we're living and we're impacting, sitting together to create that ultimate asset class. Now, why did we say, you know what, that's another asset class? because of the following. The underlying is the same. It's round, it's red, it's an apple. However, when you add several characteristics to that apple and you make it square and you make it violet, probably it should be apple 6.0. It should be a different apple. It should be a different item. Real estate, when you add what we have talked about now to it, will become a different asset class. Will become an asset class that reacts and acts differently to buyers, sellers, and people can utilize it, own it in a different way. And that's real estate 6.0. Real estate 6.0 is the evolution of the asset class to what a new asset class will evolve and become, with the underlying still the same property. That's real estate 6.0.
Okay, but you keep on mentioning yield, right? I want you to go into that into some more detail on what that actually means on a physical, sort of realistic basis. Because I like to, my portfolio, and I encourage other people's portfolio to have 60 or 70% of your portfolio earning you yield as a passive income, righty? So whether it be any sort of tokenization like Hex or Tezos, Oceanpoint, et cetera, yield generation, even staking, liquidity providing, that sort of stuff. So when you're saying that you can make an income or a passive income out of this, how and why?
Okay. So real estate in general, and here I believe you're asking about tokenized real estate, yeah? About real estate, not only tokenized, beyond tokenized, real estate 6.0, or are you asking about real estate as yield in general, Brandon?
I'm talking the protocol that you've got at the moment,
Perfect.
on the marketplace with Oceanpoint. How does that generate yield or income?
So Oceanpoint today, and I'll leave that for Denis to explain in detail, because he will be able to define it from a DeFi perspective in a totally different way and with a totally different dimension. What I would tell you generally is, because the underlying asset is yield producing, any wrapper you put onto it is a wrapper that passes on that yield, or either beyond or even beyond that on. Usually there's no 100% passive, ultimate passive income in real estate. But when you tokenize real estate and you put it on Oceanpoint, so what you are doing actually is you're creating a digital representation for the property. And then when you put it on Oceanpoint, which is our DeFi protocol, you are able to do much more with real estate that Denis will explain to us in a second. So it's a yield producing asset that we're putting on steroids, and we're diversifying and we're adding elements to it that usually are not present in conventional real estate. Denis, would you like to go, or would you like me to go on it? Go ahead.
Can I just
go ahead.
Yeah, or Brandon, yeah.
Just before you do, Denis, once again, devil's advocate. I had a conversation with a prominent crypto guy. Anyway, long story short, and we were talking about real estate agent and real estate rather. And he said, okay, you buy a property for $300,000. And then in, say, 10, 15 years time, you sell it for $500,000. And you go, woohoo, I've made $200,000. But have you? Because by the time you take in the maintenance, council rates, your interest rates, that sort of stuff, and then also when you do sell it for $500,000, you go buy up another property for $500,000, all the other properties have gone up as well, or the majority. So you're not actually getting $200,000 more of a house. You're basically getting the same house. Does that make sense?
In the exact example you've given now, which should not be the case on ground, no, you're not making money. Actually, probably with compounded inflation, you've lost money. However, this is not usually what happens in real estate if you know what you're doing. Now, why do people come to us? I run a real estate investment fund. Why? Just because I know what I'm doing in what I'm doing. I don't do cryptocurrency. I had GMRA, my crypto think tank, do it because they understand what they're doing. I do not really understand what they're doing, and I cannot advocate in it. So in my industry, if you today buy a property, the property has two kinds of benefit. One is acquired by the nature of what it is, and we'll talk about it in a second. And the second is acquired by the kind of utility that it does have. So the nature of what it is, property is formed of two things: land, which, by the way, I don't buy into the scarcity of land, just because I'll tell you in a second how urbanization is changed and what's changing about that. Scarcity has always been for urbanized land. There's no scarcity of land in Perth. There's plenty of land that's empty. Scarcity of well-zoned urbanized land was there, has been there. With your ability to build off-grid in a very efficient and easy manner, with the changes and the evolution in methods of developing and building and urbanizing, that all may change, okay? Everything like that may change. Regardless, land in general is of limited supply. Limited does not mean is of much less supply than there is demand, but is quantified, and it's very difficult to add to that supply. That's item number one. Item number two, every element that involves with developing a property, with building a property, usually is an asset that inflates, or a cost that inflates, and over the past 100 years have never gone down. One of the biggest of them is human resource. You require to build a project of 1,000 houses, you require a few thousands of workers for around 2 years or more. And that the hourly rate per worker have never been the same, or have never dropped significantly for a consistent period of time over the last 100 or even 200 years. So that's element number one. All the raw material that you use in property increase in value because of the dynamics of how that works over a consistent period of time. So that's the nature of property as an asset. It is generally an asset that grows in value just because of that. Forget about everything else. Now, then we go to the utility. Utility, you can be living in it or you can be renting it. I always believe that you should be leasing it out. What do I mean by that? Even if you're living in it, you should pay the rent, because you should separate yourself as an individual from yourself as a tenant. And that's the right way of dealing with property. So if you live in your property today and you think that your property is an investment, or you hear someone saying that the home you live in is not an investment, both of you are wrong. If you live in a property and you pay rent to yourself, you have a consistently good tenant. And obviously, the human in you is benefiting from the convenience and the social benefit of owning a property and living in your own home, but also the investor in you is benefiting from the rental. In general, rental should cover your cost of borrowing, your cost of servicing that property loan, mortgage that you have if you've taken a loan against it, as well as the cost of counsel and services and taxes and related. In general, in most countries, in most cities, in most markets, it's still cash flows positive after all of that. Now take this and add to it the growth in value that is related to two things. Part of the growth in value is related to the elements we talked about, which is the nature of the asset class. And the second part of it is related to the rental, because of the increase in the value of utility and actually the devaluation in the value of currency. With time, people pay more for everything. Your rental today, Brandon, is nothing similar to your rental 15 years ago, 20 years ago, 30 years ago. Probably, if you're renting today for 2,000 Australian dollars a month, you probably were renting for around 20 to 100 Australian dollars 20 years ago a month. And that's probably the same property. So when you grow that, if you apply a similar multiple to that, when you kind of value it, you come up with a bigger number. Both of those elements provide you with a non-beatable value growth over time. Value growth alongside cash flow. And remember, the cash flow is always averaged out with inflation, even if it's not at the same ratio. You do have in property, if you do it right, similar to everything else, similar to crypto, similar to stocks, yet in property at a different level, I believe, because again, It's an asset that's amazing in its characteristics. And I'm biased to it. You obviously noticed that. However, it's an asset that is superb in its characteristics. Add to property, guys. Add to property the fundamentals that run today on equities and crypto by tokenizing it. And you have an ultra asset class. Take that asset that I've just described for you and defined for you. Add to it what equities do have, that kind of collaborative economy, collaborative purchase, collaborative, and add to it what crypto does have, efficiency, transparency, and.
Yeah.
And watch what happens. This is what Blocksquare and Oceanpoint is all about, by the way. This is what we're all about. This is the property, and this is everything after that. By the way, the devil's advocate is a very good friend of mine, Brandon. Go ahead. Go ahead, please.
Well, if you can't get challenged on your views and you can't defend them, then you don't really understand your position. So, you know, that's how I look at it. All right, Dennis, your turn to nerdy it up, mate. Tell me how I get yield and how do I make money out of this? Because this is what it boils down to as an investor is basically, okay, cool. Show me the money. So yeah, break that down. You're on mute.
I'm on mute. Yeah, it's getting busy here. So yeah, what's show me the money? Yeah, that's a good question. I think for real estate owners, because that's the first thing, you need to have supply, right? Otherwise, you know, there's no market. So where's the money for those that are open enough to say, hey, let's tokenize real estate? I think they're raising value of their asset right away. They're adding something that increases liquidity potential of their asset. Maybe not the full amount of it, but a portion of it at least. They're creating a new valuation layer for that asset. So this is all things that add value to the asset that they hold. And you can create a REIT-like fund at a size of 10 million and not, you know, hundreds of millions or even a billion, right? Because a REIT requires hundreds of properties to be acquired, and it's really hard to build one. A real estate investment trust that can trade on a stock exchange, etc. The costs that come with this are, you know, huge. But with tokenization, anybody can run a REIT.
Yep.
Essentially. So
yeah, because the barrier to entry.
All the reasons on the buy side, you know, where's the money on the buy side? If this doesn't provide value to the market, just those two parts, you know, that's enough for somebody to grasp, oh, there's money here. Where we come in is providing the tech, the tools for the gold digging to happen more easily, because, you know, you can go and try to discover your own way of creating a shovel for this, and the machinery required to achieve this. But ultimately, it's going to take you years. First, you're going to need to blueprint this. Then you're going to need to develop this, test it, and, you know, launch it on the market. Do you know where the real estate tokenization market is going to be in 1 or 2 years? I don't know, but definitely not where we are today, because it's so fast moving. So
well, even if you were to capture 1 or 2%, you know, even if you were to capture 1 or 2% of the global real estate market, we're talking a lot of money.
It's huge. It's huge, the market, right? And we're here to support any real estate companies achieve this in a couple of weeks.
Yeah.
So that's where the money is for us, you know. And how we're building this, we're not building the money-making machine as a private company. We're making it into a DAO.
Yep.
Now imagine you being part of that. Do you want to be part of that DAO that's bringing that value on the, you know, supply chain, demand side, and everything that's in between?
Yeah, exactly, because you're basically getting part of the infrastructure. You know, you're getting investment in infrastructure. I'm going to include a video on how to buy the token and how to stake it and all that sort of stuff. I think I've already done one. It might be on the YouTube channel. Yeah, so just tying up, we'll include like obviously your website and all your details and your social medias and all that in the show notes. Yeah, so just any last thoughts or anything that you think you've missed out that we haven't covered?
Thank you so much, Brandon. And we really appreciate all what you do, because educating people today is a valuable exercise, and very few people are doing it fundamentally, because many are following the hype. So we really appreciate that. We appreciate having us. We appreciate also the support you give to Julia, our lady in Australia. I believe she does an amazing job, and connecting us is one of those amazing things she does. So for all the team at Blocksquare, and I would like to thank you. And I really enjoyed having this chat with you. And if you would have a video of the gentleman's face, the CEO of that bank, while you were talking to him, and you can post it alongside our session, that will be an ultimate pleasure.
Well, next time I go to a business meeting, I'll get someone to film it. I love going up against these traditional finance guys, because they just honestly, it's like they're blind. It's like they're ignoring the internet. You know, it really is, and that's the way I look at tokenization and blockchain technology. It's the invention, it's the reinvention of the internet. You know, and how you can gain value from it. So yeah, anyone that's just not caught up in that is just, oh my God. Anyways, Denis, have you got any last passing thoughts, mate?
Well, it was interesting to be with you on the show. So thanks for inviting us. That's the first thing, definitely. I love the conversation. Hopefully you enjoyed it as well, and hopefully the your followers and viewers will enjoy that conversation as well. I always say, just reach out to us. We are always available via Discord and Telegram. We have a great community that's being, that's growing. It's genuine people. We're not inflating a community. We're having followers who actually take the time and dig into this. It takes you maybe 1-2 days to start grasping the whole thing, but I believe it's worth it. Just come, just make the hard questions on our forums, and let the conversation grow from it. We learn from the hard questions just as much as the community does, and we're not afraid of them.
Yeah, no, I love what you guys are doing. I actually do. I really genuinely do. And as far as investment advice goes, if Julia tells me something's interesting, I just press the green button without even asking. You know what I mean? Because she's pretty cluey, old Julia. She goes, all right. Well, thank you very much for your time, guys. It was really good talking to you and sort of getting into the weeds a bit more about what you're doing, and yeah, just learning from it. I really, really like what you're doing, and I'm not shilling it because I don't really care. I'm invested, so I'm happy with it. So yeah. And I've actually done pretty good out of it. I've only actually been in it, I don't know, I couldn't tell you, probably 4 months, something like that, probably maybe 5 months, and I've watched the returns, and yeah, I've done quite well out of it. I've actually pulled out my initial investment, and it's doing these ones up and to the right. So happy with it. And I've recommended it to a bunch of my clients as well. Like I said, I like the idea of passive income and yield, you know what I mean? Sort of building for the future. So once again, guys, all the information will be in the show notes. We'll get that to you. And yeah, we'll stay in touch. Thanks very much, guys.
Thanks so much.
Thank you. Thank you, Brandon.
Cheers. Thank you, Brandon.